Stock markets around the world tumble as U.S. President Donald Trump adds 10% tariff to China, easing a one-month truce. AMCON takes over two firms over 3.6 billion naira debt, as federal government is tackling issues regarding stamp duties collection and extension of VAT exemption on capital market transactions. This is Business Express reaching you from Abuja, the nation's capital, and I'm Muplang Dakok. Justice Binta Nyako of the Federal Court has ordered Asset Management Corporation of Nigeria (AMCON) to take over two steel companies, Bao Yao Futurelex Iron Steel Company in the FCT and Bao Yao Huan Yan Iron Steel in Calabar, Cross River State, over a staggering debt of over 3.6 billion naira. The order also froze all accounts of the companies and granted AMCON possessory order over a long list of assets across the country. The National Insurance Commission (NICOM) has barred regulated entities from borrowing money to meet their recapitalization requirements. The Director of Policy Regulation of NICOM, Abola Pius, who made the disclosure in Ejobode, also said that the capital base of an underwriter was of great importance, as it would help it to underwrite more risks, as a large proportion of the local risks were presently seeded outside because of low retention capacity. And away from regulations, the Nigerian National Petroleum Corporation (NNPC) has attributed the increase in the price of household kerosene in the country to the pressure of demand and supply. The NNPC Group Manager, Group Public Affairs Division Ndu Ugamadu, said that the price of the product had been deregulated. Ugamadu said that NNPC remained the sole importer of the product and had been adjusting it with skeletal production from the refineries. Meanwhile, the federal government has been lauded for partnering the World Bank in the social and economic development of rural areas in Akwa Ibom State. The commendation was made public at a capacity building program aimed at developing the skills of those to implement the various rural development programs in the state. Kelvin Samuel reports.
To sustain the federal government effort in ensuring accessibility of social amenities in rural communities through partnership with the World Bank, the Akwa Ibom State Agency for Community and Social Development organized a two-day training where participants sharpened their skills ahead of implementation of projects cited in their various communities.
This project is time-bound, so they have to go with speed so that they will be able to finish their micro-project.
Pipeline water in place will give us a very long way to solving all these problems.
We are going to extend electricity everywhere.
Only those who have been there knows how the topography of the land is and the condition of our own livelihood.
Projects already completed in some communities include open market shops, town halls, water and electricity installations. Checks were presented to all the 10 benefiting communities for the commencement of projects. So far, a total of 136 communities have been linked to the World Bank assisted community development projects across Akwa Ibom State.
Business Express is reaching you from Abuja, the nation's capital. The program continues after this break. Nweabu Lebosinuka is a trade lawyer and executive director of Nigeria Private Sector Alliance, NIPSA. He joins us to look at the investment climate and the nation. Thank you for coming on Business Express.
Thank you.
Okay. So investments in Nigeria for the first quarter of this year, 2019, was less than that of the corresponding quarter in 2018. What do you have to say about that?
Yeah, I think basically what's responsible for that is the kind of dispute mechanism that we have in place, or the issues that arise from particularly the MTN Nigerian crisis. So because the way investors behave, they sound out the kind of treatment you give to investors and what they get from your environment or your climate, as it were. But I think basically that was one of the immediate signal to the global community to be careful. It's kind of in quote about the Nigerian investment situation, and so. But I think that has been resolved. But I think that was just one of those issues. And then don't also forget that we've been for some months now after election without possibly what I would call ministers, as it were.
Yes.
And so, who gives direction to what was also a key factor.
Yes. So now that we are waiting for the portfolios of the ministers, what would you say are those areas that need urgent attention in terms of investment?
Yeah, basically, our IT sector is a vibrant one. That when we have ministers in place, we should see how that sector can be supported. Our agri sector remain key to everything we do. We also have a robust services sector that has not been given the best of attention. And that can also become one of the sectors that should get us up, as it were. And then ultimately, our manufacturing sector, we need to give it the best of attention when we have possibly a good Minister of Trade and Investment and Industry as well. So these are sectors that can really give us a boost as we move on.
Okay. Yeah. So as a trade lawyer, in comparing foreign direct investment and local investment, which one would you say should take preeminence?
Yeah. Actually, if we get things right, nobody can do better for us than ourselves. And so domestic investment is very key for our economy, especially in a system where we have also seen global challenges, as it were. So everybody is trying to see how they can save their own money for their own environment. But if we create the enabling environment for local investors in the country to begin to invest in some of those sectors that we think are very critical for our economic growth, that is also a good way to go. However, in the context of globalization, we are not on our own. We interdepend on other countries. There are things we have that other people don't have and they are interested in. And so that will also be a basis for foreign direct investment inflow to be encouraged. So it's a two-way thing. Okay. No one is super than the other. Okay. But we have to harmonize, we have to harness this two side of investment flow into our economy.
Okay, let's talk about infrastructure. What do you think are those things that need to be done to overhaul the infrastructure of the nation?
Is the almighty power or energy sector is key. Okay. It is the belief of Nigerians that when we get our power sector working, there will be other value chain that we follow. And so key on the agenda should be power. Okay. When we get that done, it will stimulate our industry. It will reduce the cost of production. It will also support our research and development effort across sectors. So it will help research, as I've said. So
what about the transport sector?
Yeah, the transport sector is also
And
an
research
area,
as well.
yes, an area to also focus on. But in terms of what we give or what will become a springboard for other sectors to grow,
Yes.
power becomes key. Luckily the president is also doing some things in that direction. So let's see how that will be upscaled to ensure that we have constant or ready power across the country.
Okay.
Yeah.
So are you optimistic that something positive is really going to happen in terms of infrastructure before the end of this year?
Yeah, I think I want to believe so, because there have been, luckily for us, we had a continuity of government. And so it's not a new government that we say is going to crash some of the things we've done for the past 4 years. So this is a continuous system. So whatever has been done for the past 4 years can also be improved upon in the next 4 years. So that gives us a kind of hope for us to expect some consistency in intervention in the power sector, in agri sector, in manufacturing sector. I mean, in visually every sector of our national economy. We hope and believe that things will get better.
Okay. The Central Bank of Nigeria reported positive purchasing managers index. And do you think that is something to cheer about?
Yeah, the CBN PMI has different indicators that they rely on. But I would just want to say, from the manufacturing purchasing managers index, is about 57.6 index point, indicating that there is an improvement or there's an expansion in our manufacturing sector. Though in the production level index is a little bit lower than what we had last quarter. But one key area that we also need to be excited about from what the CBN have released is the employment level index of 57.3 level index of employment, indicating that there is an increase of employment for the past 27 months consecutively. So these are indicators that show that things are improving, things are changing. It may not be obvious to the ordinary citizen, but from the statistics of CBN, manufacturing is expanding, employment has been sustained to a very large extent for this period. Okay. Yeah.
So what are your suggestions for the Economic Recovery and Growth Plan, ERGP, of the federal government as it continues to, make progress in that direction?
Yeah, I have a bias when it comes to that, because the ERGP, I think, is supposed to end next year or thereabout. But if you ask me in terms of monitoring, in terms of benchmarking, I would say we are not following up the ERGP the way it was anticipated or the way it was proposed. So I think.
So what would you suggest?
We need to do. Will I use the word, a midterm review of what the ERGP has been, and then what it is on ground. Because for me, it's like just an academic document that does not speak to our reality, or it's not being implemented in a manner that speaks to the situation at hand. So we need to do a review before we come up with the next development plan for the country. We need to interrogate the ERGP and see where we are and what is working and what is not working before we develop another possibly a long-term or a short-term development agenda for beyond 2020, as it were.
Okay, let's talk about the AFCFTA. Now that Nigeria has assented to it and the country is waiting for it to begin by next year, 2020, what are those likely things that you intend to see or you expect to see in terms of trade, in terms of investments with Nigeria and other countries?
Yeah, AFCFTA has been said, and I believe it's a game changer. It has the capacity to stimulate the growth of African countries, particularly Nigeria, because we have more of productive capacity than most countries. So the potentials in AFCFTA for the benefit of Nigeria is huge if we put in place those things we've earlier discussed. I mean, for the manufacturers in Nigeria, for the local producers and entrepreneurs in Nigeria, it provides a bigger market. You know, our estimation at this moment, we are about 200 million Nigerians. And so if you're a producer and you are confined to Nigeria, you have a market of 200 million. But when it is under the framework of the AFCFTA, we have a market of 1.2 billion human beings to supply and to sell or to do business with. So that gives it a bigger space, which means that we need to increase our production or productive capacity. We need to also upscale our competitiveness, what we do, I mean, the way and manner we do our businesses. We also have to, the other receiving side, we also have to open up our mind to understand that we are no longer Nigerians alone. We are now in the midst of 1.2 billion people. So we should expect more people to come into Nigeria, in as much as we also expect more Nigerians to access other African markets. So the opportunities are huge, very huge, and we need to put our house in order so that we can maximize the benefit of the AFCFTA.
Okay. On a closing note, what subsectors do you see as the drivers of economic growth for Nigeria?
Like I said earlier, for me, we have to support our manufacturing sector.
Okay.
We have to support the services sector. We have to support our agricultural sector. We have to support the information and communication technology sector. We have to support even our banking sector, our financial sector, as it were. So these are sectors that have the capacity to carry out. I mean, we also have to support our health sector. You know, because if you check the kind of volume of money that we spend going out for health care and the rest of it, including the import, I mean our import bill in terms of food import. These are indicators that we need to hold our agri sector. We need to provide the best of budget allocation to our health sector, so that we can do some conservation of resources at home than exporting these resources in order to access those services outside. So we need to do that in a very conscious and constructive manner, even as we expect new ministers to come on board.
Thank you very much,
Yeah.
Nwebu Lebosi Nuka, a trade lawyer.
Thank you.
Moving on, the equities market extended losing streak to end the previous week in the negative. Bosede Ebo has details.
It was a slippery start for stock market investors around the world. In the local market, the bears have continued to squeeze out the twin market gauges of the Nigerian Stock Exchange as investor appetite persists. Year-to-date returns has so far depreciated by 12.09%. In the week ended Friday, the 2nd of August 2019, the NSE All-Share Index and market capitalization depreciated further by 1.038% and 1.032% to close at 27,630.46 and 13.4 trillion naira. The fall was recorded in all other indices as well, with the exception of NSE ASIM and NSE Industrial Goods, which appreciated by 0.17% and 0.98%. A total turnover of 759.2 million shares worth 14.03 billion naira were traded by investors in 16,209 deals in the week under review. A look at the sectors indicates that the financial services industry led the activity chart with 495.6 million shares valued at 5.1 billion naira traded in 7,832 deals. It was followed by a distant conglomerate industry with 68.2 million shares worth 136.8 million naira in 896 deals. While the third place was the ICT industry with a turnover of 53.9 million shares worth 4.7 billion naira in 849 deals. Zenith Bank PLC, Guaranty Trust Bank PLC, and United Bank for Africa PLC were the most active stocks in the course of the week. They jointly accounted for 237.8 million shares worth 4.2 billion naira in 3,555 deals. A total of 87,142 units of exchange-traded products (ETPs) valued at 1.1 million naira were traded during the week in 18 deals. Also, 433,774 units of federal government bonds valued at 445.3 million naira were traded in 16 deals. On the price movement chart, 32 equities appreciated in price, 27 equities depreciated, while 109 equities remained unaffected.
Stocks were off to a weak start on Monday morning, but garnered marginal gains at the close of trade, advancing by 0.14% to see the oil share index end at 27,669.38 basis points. Market capitalization closed at 13.483 trillion naira. 280 million equities swapped hands in 3,314 deals valued at 1.409 billion naira. Sterling Bank at almost 200 million led in terms of volume and was trailed by Zenith Bank and Dangote Flour. It was the worst week ever in 2019 for major stocks around the globe last week as new trade war concerns buoyed by jobs data in the US take toll. Bosede Abel again has a rundown of how the market fared.
On the global scene, U.S. stocks fell further on Friday due to massive sell-offs after the Labor Department recorded a 164,000 rise in July payroll, with unemployment numbers unchanged at 3.7%. Analysts have maintained divergent views over the fall of the stock indices from record highs to 1 month low on concerns that include trade war. In the worst trading week for 2019, the Dow Jones Industrial Average fell by 2.6% to 26,485.01 points. The S&P 500 fell by 3.1% to 2,932.05 points, and the Nasdaq Composite went down by 3.9% to 8,004.07 points. In Asia, China vowed Friday to fight against Trump's latest tariff, a 10% on the remaining 300 billion Chinese imports, a move that ended a month-long trade truce. The announcement dragged stocks down, with Hong Kong and Japan dropping by more than 2%. The Shanghai Composite fell 2.6 points at about 2,867.84 points. The Hang Seng Index declined by 2.35% to close Friday at 26,918.58 points, while Nikkei of Japan plunged 2.6% to finish at 21,087.16 points. The trade concerns were mutual in Europe as stocks got battered following U.S. President Donald Trump's tweets on China. UK's FTSE 100 ended 1.9% lower at 7,407.06 points. Germany's DAX dropped 4.4% to end Friday at 11,872.44 points, and France's CAC 40 fell 4.5% to close the week at 5,359 points. Back home in Africa, South Africa's JSE lost 2.3% on the week to close at 56,274 points. Ghana's composite index settled at 2,332.77. Tunisia's Tunidex marginally on the week by 0.097% to close at 7,170.47 points. Nairobi's all-share index lost 0.67% to end the week at 148.33 points, while the Namibian index shaved off 3.57% to resume this week at 1,288.28 points.
And on the foreign exchange market, here are the rates for major currencies against the naira. And that brings us to the end of this edition of Business Express. You can access all previous episodes on YouTube, and you can also communicate with us on Twitter. The handle is @NTA News Now. The hashtag is BizX. Business Express returns on Wednesday. I am Muplang Dakok.